In the world of finance, there are tales so legendary that they become etched in history. One such story is that of George Soros, the investor and trader who stunned the world with a single trade. Soros not only made over $1 billion in one move, but also changed the financial landscape forever. How did it all begin, and what lessons can we learn? In the early 1990s, the United Kingdom was grappling with economic challenges. To stabilize its currency, the British government tied the pound sterling to the European Exchange Rate Mechanism, ERM. This system required the UK to maintain the pound's value within a specific range relative to other European currencies, particularly the German mark. However, this policy placed immense strain on the UK economy. High inflation, soaring interest rates, and economic stagnation led many to question whether the Bank of England could sustain the pound's value. Enter George Soros. Through careful analysis, Soros and his team at the Quantum Fund concluded that the pound was overvalued and that the Bank of England would eventually be forced to devalue it. Soros devised a simple yet audacious strategy: short-selling the pound. This involved borrowing billions of pounds and selling them at the current exchange rate, betting that the currency's value would drop. If it did, Soros could repurchase the pounds at a lower price, return them to the lender, and pocket the difference. He understood that the Bank of England's reserves were limited and that defending the pound against market pressures was unsustainable in the long run. On September 16, 1992, now famously known as Black Wednesday, Soros executed his plan. He and his team began selling pounds on an unprecedented scale, triggering a market panic. The Bank of England tried to counter the attack by buying pounds and raising interest rates to as high as 15%, hoping to attract investors and stabilize the currency. However, these efforts failed. Other traders, observing Soros's actions, joined the selling frenzy. By the end of the day, the Bank of England announced that it would withdraw from the ERM, effectively devaluing the pound. Soros's gamble paid off. He reportedly earned over $1 billion in profits from this single trade. The event cemented his reputation as one of the greatest financial minds in history, earning him the nickname, "the man who broke the Bank of England." The impact of this trade was profound. 1. Economic implications for the UK. Although the devaluation initially seemed like a defeat, it allowed the UK to lower interest rates and adopt a more flexible monetary policy, ultimately leading to economic recovery. Second, Soros's fame. This trade propelled Soros into the global spotlight, establishing him as a legendary investor. Third market lesson: it demonstrated that even the most powerful institutions could falter under market pressure. What set Soros apart? 1. Insight and analysis. He identified the structural weaknesses in the ERM. 2. Courage. Betting against a central bank required extraordinary confidence. 3. Risk management. Soros meticulously calculated the risks and potential rewards, ensuring he was prepared for any outcome. Soros's trade on Black Wednesday remains a defining moment in financial history. It serves as a testament to the power of critical thinking, bold decision-making, and understanding market dynamics. But the question remains: if you were in Soros's position, would you have taken the risk? And more importantly, would you have had the discipline and insight to pull it off?